Here's a look at market action and market activity for the day gone by. A quiet and a rather ordinary Tuesday for Indian markets. Benchmark indices traded in a narrow and a predictable range despite underlying momentum. More than global cues today, local news flow had a major impact on Indian markets, and from start to finish, benchmark indices they moved in a narrow band, which to my mind is a perfect outcome after last week's monster rally. Here's a look at some key highlights for market activity for the day gone by. Real estate index was up by another 1.5%. The real estate index is now up by about 4.5% in just a matter of 2 days. Nifty futures have closed at a premium. Ranked mid-cap stocks today have appreciated on strong volumes. Telecom stocks, they remain mixed after a split verdict on 3G roaming. Tech stocks came down on strong volumes, and the top traded counter on both the exchanges was Unitech. So what's the way forward for Indian markets from these levels? To discuss market fundamentals on this edition of Markets Tomorrow, we have for you Pankaj Pandey of ICICI Direct and Ashwini Gujral. He will give us a flavor of market technicals. Pankaj, Ashwini, gentlemen, good evening to you. Thank you for joining us. Ashwini, as always, you go first. First, a word on market action and market activity for the day gone by.
The market continues to be in a upward grind, and 5300 seems to be providing a decent amount of resistance. I think post some kind of consolidation between 5250, 5300, we will probably break on the upside and move towards 5400 to 5420. So chances are that there will be more consolidation till we get more announcements from the government, and in case the global rally continues, I think there seems to be more upside on the market than downside. Trailing stop broadly should be in the region of 5230 to 5250.
Pankaj Pandey, what is your assessment? 2 weeks ago there were bears everywhere, now bulls have made a comeback, but do you think bulls are here to stay?
Well, yes, I think from a year's perspective, what we are hoping is that probably FY14 would be a good year of growth. Last year we had about 7% kind of a growth, and FY13 we are expecting 9 to 10% kind of a growth. So in a worst come worst basis, probably markets may not do something for a year, but I think in a decent scenario, it is quite possible that the market can deliver 20% kind of an upside from current levels. So Sensex could touch levels of 20,000.
But what is your short-term market view, Pankaj?
From a 1 month perspective, what we are hoping is that 5150 will hold, and that will sort of provide an upward leg move to the market, and initial resistance would be 5240. Once those levels are crossed, I think 5350 or 5450 is what we would look at in a month's time frame.
Right, some more stocks and some more trends. Telecom for you, telecom stocks were mixed. Bharti, in fact, was a rather volatile stock because of the news flow. Ideal and Arcom, they both appreciated on strong volumes. Godrej Properties, that was one stock which was the news, followed by Reliance Infra and then GVK. Consumer durable stocks, they had a good session. Titan, TTK and then Bajaj Electricals also appreciated on decent volumes. Airline stocks across the board, they went up in the last 1 hour of trade. Spice, Kingfisher Airlines and then Jet Airways. Price action on your screen, 402 for Jet, 12 rupees for Kingfisher Airlines, and check on SpiceJet out, up 5%. FMCG stocks, it was a poor Monday for the FMCG index, courtesy ITC, but today Asian Paints, Colgate, they both were rather strong. Some mid-cap gainers now, and interesting names here. The sectoral leadership in the mid-cap space was clearly missing, so you had Agrare Finance followed by Sun TV, and then Apollo Hospitals, which actually had quite a decent session. But if you are hunting for a clear trend, well, I would say that has to be real estate. Ashwini, what is, to your mind, how would you judge the technical setup for real estate stocks?
Well, I think they are going through, a rally along with the market. Nothing spectacular so far. Probably the strongest real estate stock is Sobha Developers, where if we can get past 350, 355, we could see levels of 415, 420. DLF, as I had said yesterday, seems likely to move towards 235, 240. So it's a beta rally. I don't think real estate will, start outperforming in the market. Basically, everywhere where there are short positions, they are tending to get covered, and broadly it will be in line with the market.
Pankaj, are you advising your clients that they should use the current rally in real estate stocks to their advantage and clean up their house and clean up their real estate and reduce the real estate exposure?
Well, yes, I think that will be a good strategy to do. But we have not been chasing many real estate counters. Our preference has been Oberoi Realty, and besides that, Sobha is one which is sort of decent among all the players. So these are two stocks one should have a hang on. I think besides that, other stocks, as and when people get an opportunity to exit, I think it is better to exit these counters and not remain in them.
Pankaj, at a time when Indian markets have rediscovered momentum and growth, stocks are making a comeback. Why are you a bit surprised with price action in some of the FMCG names? Names like Bulk, Colgate, Asian Paints, to a large extent Titan as well?
Well, I think that again needs to be looked at from a stock-specific perspective. I think if you look at some of the Tier 1 FMCG names, they have sort of corrected. But I think the basic growth remains intact. Say, for example, ITC, we are expecting 20% kind of a top line and bottom line growth. But then again, I think if you look at valuation, it's about 35 times forward basis, which is quite expensive. So you require at least holding period of 3 years to get that margin of safety in another 2 or 3 years to make money. So in that sense, they are a bit expensive. But there are certain pockets which one can look at, like we are sort of positive on VST Industries. We are expecting about 30% kind of a top line growth and 40% bottom line growth. The company did a cigarette price hike in this quarter. I think that should help going forward. We are expecting about 65 rupees kind of a dividend next year, so that also makes a good case. So one needs to be a sort of stock specific rather than looking at all the stocks with the same color.
IT stocks today have corrected, and some large cap IT stocks today have corrected on strong volumes. Now there are two factors which are driving IT stocks down. Number one, rupee has appreciated, and in just 3 trading sessions, rupee has appreciated by a good solid 4% against the US dollar. That has made rupee the best performing Asian market currency, at least in a 5-day period. B, the consensus on the street is that the global economic environment is tough, that Europe is still in a mess, and after the Labour scam, European banks, they are likely to cut their outsourcing. So a couple of global factors also which are now driving IT stocks down. Pankaj, how would you assess the current market environment for IT companies, and do you expect on 20th of July Infosys Technologies could give a profit warning?
For Infosys, what we are expecting is that they'll sort of give a dollar revenue degrowth of about 0.5%, whereas other Tier 1 names like HCLTech and TCS will give about 2% kind of a growth, whereas Wipro might do 0.5% kind of a growth. I think overall macro perspective still remains quite cautious. I think management commentaries stating that probably the BFS, excluding insurance, I think the budgets are trimmed 5 to 15%, so which will be a sort of a hangover. And once that, I think post quarter results, it will be interesting to see whether Infosys trims its guidance or not. But from a valuation perspective, if you look at, I think Infosys is trading somewhere about 15 times forward basis, which is, I think, quite attractive compared to some of the other Tier 1 names. Or I think I would still prefer Infosys compared to some of the mid-cap names like eClerx, even though they would be trading at 9 to 10 times forward multiples and might be looking attractive. I think valuation-wise, I would still go with Infosys. It might still benefit from the fact that the counters have got low expectation compared to other Tier 1 names.
Ashwini, for those who are looking at entry point to buy Infosys, what could be that entry point?
See, the first question should be whether you should look at IT right now. The answer to that is no, because there are the rupee headwinds, etc., and the stocks are unable to break out to intermediate highs. I would much rather look at companies which are breaking out to new intermediate highs, and they happen to be in the infrastructure, capital goods, and those sort of sectors where government policy is likely to impact. So if somebody must enter, then TCS is probably the best stock to enter on declines. around 1200, 1220. You can get into that stock. Finally, it'll make fresh moves only beyond levels of about 1280. On the mid caps, probably something like Mindtree is a decent stock, and on declines, if you can enter out there, a short-term target is about 750. Mindtree is coming out of a long underperformance, and chances are that this rally will have much further to go on the upside.
Let's look at banks. And Kotak Mahindra Bank this year is up by about 40%, followed by HDFC Bank, which is up by about 34%. But Axis Bank and ICICI Bank, those two other private sector banks, they have been marked underperformers. Pankaj, everyone knows why HDFC Bank always outperforms in a tough environment. But if I look at this year's price performance, it is not HDFC Bank, it is Kotak Mahindra Bank, which is a 40%. So what is fueling price action and momentum in Kotak Mahindra Bank?
If we go back 2 or 3 years back, I think the capital market side was actually aiding growth. But from there on, I think the transition has happened on the banking side, where the banking has started contributing far more compared to the capital market side. I think the growth has been about 30%, and probably market is sort of looking at the fact that somewhere down the line in future, if you have some dilution, probably that might happen at a slightly at a much higher price. That is one thing. I think there are certain positives which can happen. I think you have subsidiaries like capital market, which we have sort of valued at about 2,000 odd crores, which actually can be far more higher if the overall market scenario improves. I think that will provide quicker. Otherwise, banking as a standalone piece looks value to us. So you will have other businesses which will do a catch up, and that is where we think there could be a possible upside into this stock.
Ashwini, technically, is it difficult to differentiate between Kotak Mahindra Bank and HDFC Bank because one is up 40%, the other one is up 35%?
See, there's a difference between both. I don't think Kotak is at all-time highs and HDFC is. So I would much rather look at HDFC Bank if I have to choose amongst the two. Although both look strong, Kotak, if we can get past the 600, 605 type of zone, chances are that it could, challenge its previous highs of about 670, 680. But HDFC Bank is the one that looks extremely positive, and you should be poised to touch levels of about 620 here.
Reliance Infra, Ashwini, for this year, Reliance Infra is the best performing Nifty stock. It is up 65%. Today also, Reliance Infra added another 1.5%. Do you think the stock is looking good for another 10% from these levels?
I would think so, particularly if there are some positive moves by the government. Reliance Infra could touch levels of 615 to 620 on the upside, post a consolidation around these 550 type of zones.
Pankaj, L&T is up 40% this year. It had a quiet Tuesday, but for those who believe in genuine value, at what price point do you think L&T offers genuine value?
I think as of now we have a target price of about 1470 around on this particular stock. I think somewhere between 1000 to 1200 should be a good entry point. Not that it cannot be looked at even current levels, but somewhere down the line I think the holding needs to extend beyond 2 years, because by then probably you'll have some clarity as to what the government does on various policy front. But for the quarter, I think what the company has done is that they are set to achieve 20,000 odd crores of order book, so which is I think pretty good, and which is what is sort of being reflected in the current market prices of the stock.